Welcome back to another episode of That Backyard Property Pod. Here again today for another mini episode. It's a little different today. I'm going to talk a little bit about myself, which I actually don't like doing, to be honest. But I think it's really important to be really open about properties and properties that we've purchased ourselves, myself and my wife, because a lot of people want to know. A lot of the curtains are closed behind people's doors to say, well, I don't want to talk about finance. I don't want to talk about my properties. But the reality is the more that we talk about this and discuss it with our friends, our family, the more myths will be debunked and the more comfortable we start to feel around our finances. So I was going to go into the properties that we've purchased because I thought that this was a really interesting topic, especially the market we're currently in. So I bought my first property in Darwin in 2012. So in 2012, it was a very, very different market to what it ended up becoming, but it was a very similar market to the one that was in Perth at the same time. Really, really strong. Very different to Sydney, and I wish I had bought in Sydney instead of Darwin at the time. So Darwin was a really strong market. To buy this property, it was for $480,000 in a suburb in Darwin called Rapid Creek. So to buy this property, I used a guarantor. And so I'm really big on guarantors, and I spoke about this in another mini episode. So the guarantor was there to help through the process of avoiding mortgage insurance. And so guarantor, the benefit there, avoid mortgage insurance and also pay a lower interest rate because the bank is assessing you at an 80% loan to value ratio rather than higher. So the guarantor was there. But the key for the guarantor was to try and remove them as quick as we could. So as part of the first home buyer scheme in the Northern Territory at the time, you had to live in the property within the first 12 months for a period of 6 months after that. So we rented the property for a period of time. At that time, I would pay the repayments, whilst also the rent was paying the repayments as well. Divulging a little bit more, quite interesting. And I think this is really funny for a lot of people that are listening that just got their first home loan. The repayments were $500 a week. I paid $500 a week after the first month. I'd paid $2,000. Wonderful. The loan had come down by $2,000. Well, this was easy. How hard's home loans? And then all of a sudden, the cheeky interest was added back to the loan. And I only paid off $150 for that month. So it was quite dejecting. But it's important to note that we all need a bit more education in this space. So that was the first purchase. It was for $460,000, and I was really proud of it. It was a great place to live. It was near the water in Darwin, all those sort of things. It's not where I ended up wanting to live eventually, and we moved down to Perth, and we kept that property. The problem with that property, though, is that it went down to $320,000. And so anyone that is buying their first home or has bought their first home in the last 3, 4, 5 years in Perth and has seen an astronomical growth in their home, I am a little bit envious because my one did the complete opposite and it tanked, which was okay because I hadn't sold, so it was a paper loss. And so we ended up using Airbnb and renting the property on Airbnb in Darwin for a period of time, which was quite lucrative. It was good, but there's a lot of problems with Airbnb because there's a lot of high turnover. And so eventually what we had decided was we probably should let go of this property. However, we'd paid this amount and the loan was this amount, but it was worth only this. So we actually had to hold on to that for a little while. In the meantime, we moved to Perth and we bought a property in 2017 in Karrinyup, a little duplex in Karrinyup, near Karrinyup School. It's a wonderful place to live. And so as part of that, my wife was living in Darwin with my parents and I was living in Perth with her parents. Great scenario, right? So I went ahead and I pulled the trigger on this new property. And it was sight unseen from my wife, so there's a lot of trust. But given the industry I'm in, you'd hope that I had some experience. It was in a market that was really depressed in Perth. It's funny, though, because in a depressed market in Perth, everyone was saying, don't buy, the market is terrible. But also in a really strong market, everyone's saying, don't buy, the market's too strong. So when do you buy? It's when the finances work out and you find the right property. In this case, we had. And so we had our 10-point checklist. And we worked through the 10 points that were non-negotiable, and then we had to compromise on some, and we then ended up with this property, which we're still in today, which is amazing. During that process, we were then saying, well, we don't really want to go back to Darwin. The property value had increased somewhat, and we finally decided to sell the property. Luckily, I knew a really good real estate agent who was also my mum, who was on episode whatever it might be earlier in the year. And so mum sold the property. We sold it for $420,000, just a cheeky couple of $1,000 loss, but that's okay because we had passed on from that property and we were on to something else. And so in the meantime, we then put that aside, cleared the loan or whatever it might be, and we decided that we would love to get an investment in a growing market. The Perth market was starting to get quite strong in 2020 during COVID, and we decided to pull the trigger on a property down towards Mandurah. And so what we did is we actually took equity out from our property in Karrinyup, used that equity to then buy the investment property near Mandurah. We didn't put in a single dollar from our own savings. It all came from the equity that we had built. So if you are in the position where you have had the property increase in value and you're looking to invest, you do not need to put in your own savings in a lot of cases. So if that's something you're looking at doing, then please reach out. So we took that, we bought the property down there, another duplex, and it was for $310,000. So that was bought there, and that's great, and that just sort of ticked along for a while. In the meantime, the Perth property market has done it had such a strong run, and I personally have watched so many people have some great success, but we only had one property that was an investment in that case, and we didn't take advantage of this market because the property market rewards action takers and decision makers, and we didn't take enough action. We only had the one property. So this market's still going so strong, as everyone knows, but we've decided to diversify and look at another state. And for us, we've found that Melbourne is a state that looks like, or a city that looks like it is going to have some growth over the next 10 to 20 years. And so what we've done is we've taken the growth that we've had over the last couple of years in both properties and gone ahead and bought an investment property in Melbourne through the help of, funnily enough, Blue Wealth, and Tony Hayek, the CEO of Blue Wealth, helped us with that, and he was on one of the early episodes. So we'll link that in the show notes. So that example of the Melbourne, we didn't put in any of our own savings. Now, it's so important to understand when using leverage or using loans from the bank, you need to be comfortable with that process and getting a debt. Because if you're not, I would encourage you not to go down this path. If you are comfortable and you're looking to explore doing something similar, then reach out. I'm more than happy to talk to you because it's important that we look at all the scenarios. And so for us, we've bought both of those without using our own cash, which is great. But obviously, there's a bit of debt there, so we need to be comfortable with that debt. When you're investing, from my perspective, we're looking at either trying to get good rent or trying to get good yield from the property, or we're trying to look at capital growth in the future. So everyone's on a different journey. Everyone's got different goals, especially around investing and property. But don't listen to the people that don't go through this process themselves because they don't have the experience in there. Our next investment, I think, will possibly be down that commercial aspect. And I'd love to explore that more. And so I'll be getting in more guests around commercial lending, commercial buying, buyers agents in the commercial space, because I think that's really exciting. And so for us, that's where we stand at the moment. So anyone that has bought a property and it's gone up in value, that's fantastic for you, but it doesn't happen to everyone. My first one was wonderful. It didn't have the same growth that I would have liked it to, but we got rid of it and we managed to clear that and look elsewhere. So there's so many lessons to be learned from failures that we can really grasp what we're trying to do and get a better understanding of what our goals and investment strategy is. So today was literally just to give you an idea on what we've personally done, because I think it's important that for anyone listening to understand us as humans and us as making mistakes through property and somewhat doing a little bit well on this side, but it's a real journey, and we're still learning ourselves of what the next steps are. So if you're looking to invest in property, I would strongly encourage you to reach out to a mortgage broker, because the key to investing is how to get money. It's all a game of finance. And so the more understanding you have in finance, the better off you'll be in making decisions for you and your family in the future. Thanks again for listening. I would love it if you could share, like, subscribe, all that sort of stuff. That would be amazing. And if you have any questions, please reach out in the comments or send us an email or whatever it might be. I'd love to hear from you, because it's really cool to hear from anyone that's listening in the audience. So thanks again. I cannot wait to see you again next week.